Hey, what's up, guys? Welcome to Trade Indy. So here's the thing. It's a new channel. I know there's a million of them out there, and the last thing we want to do is be repetitive. So what we're going to do is we're going to try to take an entertainment-first approach. Instead of having a computer with entry points and charts and indicators and, talking about P&L and all that stuff, we are going to take a little bit more of an organic approach and a conversational approach. So we're going to talk about daily recaps. We'll talk about hot topics in the market. We'll talk about what's going on. And we'll also talk about things that I have learned over the last couple of years as I have taken my day trading a lot more serious. And we also have somebody that's very, very beneficial to the podcast. Ben Jones is with us. So he's probably forgotten more about finance than I'll ever know. So he will keep me in line and let me know when I'm being crazy because I am more into the psychological aspect of trading. He is way more into the financial aspect of trading. And it's probably pretty entertaining when he yells at me for going off the rails. So sit back, subscribe, check out our first few episodes. Hopefully we won't disappoint. And we will talk to you guys later. Thanks. Dude.
Today was a real winner, huh?
Dude.
You know what's so funny? I got to tell you this.
This shit was crazy.
I got to tell you one thing because, you started it off, I've got all these crazy credentials, right? CFA, CPA, CFP,
Smart.
MBA from Chicago, just crazy stuff.
Yeah, look up University of Chicago.
But you sit here talking about day trading.
Yeah.
The first thing they say in business school is, at least when I was going, was, okay, everybody, this is horseshit.
Yeah.
Just want to let you know. And
they're right.
Technical analysis should be thrown out. We should do fundamentals. And that's the church that I belonged to for years.
Yeah. Paid the bills for a long time. Not saying it's wrong. Apple just crushed their earnings. AMD just crushed their earnings.
Yep.
Here's the thing, though, doesn't matter because a Reddit chat room called Wall Street Bets is, for a blip in time, is running the financial industry.
And I heard it was, 2.2 million people are in that little group?
2.2 million that have joined the community, and at any given time, there are 500,000 people that are active.
500,000.
And it is just the most chaotic bunch of nonsense you've ever seen, but the people behind it know what they're talking about, have a plan, and have figured out a way to organize the masses. Because for those of you guys that are, obviously this is the first episode on the channel, and I don't know, hopefully we can appeal to a wide range from, day one traders that just got their first, that just opened their Robinhood account to people that have, done it forever. But whether you're brand new or you're, an old salty dog, there has not been a point in time where the little guy has had hedge funds by the balls.
And what you and I spoke about was the fact that hedge funds have been doing this for years.
Been doing it for years.
They've been shorting the living,
you want to lend it 10 to 1 so that you can take your
leverage it up.
Yeah, you'll take your 2 and 20 rip with with absolutely no risk. And you'll just, you'll just put all your weight, billions of dollars on these, any size stock, but penny stocks are the easiest to manipulate, which is why every professor you ever had told you to stop, told you they were garbage.
Absolutely.
But now when you get up to 2.2 million little guys, and sprinkled in there's some real money because, we've had, Elon tweeted to him this week. Chamath tweeted to him this week.
Whoa, I didn't even know that.
Chamath was on CNBC today on the halftime show. It was my favorite 20 minutes I've ever seen on finance TV in my life. Because the suits are just up in arms, man. They're just, can you? They
don't like when the game has changed on them and they can't control it. That's what's so awesome about it.
I can't remember the host's name. I should know it, but he said something like, "Well, Chamath, this, this is diminishing the integrity of the market. And I about fell out of my chair. The integrity of the market, aka you're not winning, so you're pissed. Are you integrity? So by his definition, integrity of the market means little guy can't do anything that he wants. Rich people steal money from him at a whim, and now they're really, really pissed off that 2 hedge funds damn near went bankrupt this week. So Melvin and Citadel Capital.
It was Citadel?
It was Citadel.
Oh, geez, man.
They were down $5.1 billion yesterday. I don't know what the damage is today.
And you look at GameStop, and what was it up to today?
3. No. It was up. It hit like 330 today.
I blinked for a moment trying to do something else, and we're over 300.
Oh, guys, and here's the thing: like, that's like the equivalent of waking up tomorrow and Blockbuster Video is worth like $1,000 a share.
I think that's
no offense, GameStop. You can look at your investors. You guys don't even believe in it. You sold all your shares forever ago, which is kind of sad because you didn't get rich off this squeeze. But
Grant and I, we went over to GameStop, and we've only been there one time.
Been there one time.
Because when I set up all their video games, it's like download this, download that, and we're out, baby.
Yep. And the thing that was keeping them alive was the trade-in value. But, you bring them a stack of 15 games, and they give you $10. It doesn't really seem...
But they're all moving away from it.
Yeah, they're all moving to downloadable content, DLC, and
I think they even came out and said, "Hey, we're only going to be doing downloadable. We're not even going to be printing
anything." It's nothing against them. Like, no. Remember when Netflix used to mail you the disc?
I do.
Remember that?
Red packages.
Yeah. Guess what? They got better.
Mm-hmm.
GameStop didn't get better. That's okay. That's just business. That's fine. They'll go on and find something else. We'll revolutionize and evolve. But the story behind it is that the leader of the chat room, well, not really, well, I guess.
Yeah, tell them a little bit about what the Roaring Kitten.
Roaring Kitty on YouTube. And on YouTube, he's so nice. He's got great content. He knows what he's talking about. He's not stupid. If you went into the Discord or a chat room or were just on the Reddit chat room, you may get a different impression because it's just insanity.
And what's his name again? Do you remember?
Oh, what is his real name?
I'm sure you can Google it.
I don't want to Google it right now, but Roaring Kitty was so funny that you can find him. And you can Google it.
But just kind of just...
So basically, there was a short-selling outfit called Citron that put out some tweets a year ago. So their whole shtick, not shtick, this is what they do. They investigate a company, they find companies that are overvalued or that are obsolete, and then they put a huge short position on it, and then they put some stuff out in the media on Twitter, Facebook, whatever their sources are, to kind of take some shots at them to make sure to ruin the public sentiment so that people will sell and the stock comes down and they make money.
Right.
So Citron was like, hey, there's this lame duck, there's this wounded animal out in the field. We just got to shoot. I mean, you know what I mean? Like, GameStop should have been the easiest. GameStop should have been the easiest
short play
ever. So somehow, and I don't know, you'd have to have this dude on here to tell you the exact motives, but GameStop was nostalgic to him.
A lot of people grew up with it.
They grew up with it, and they didn't like it, and they kind of took this position of the man is trying to kick, one of our own.
Trying to destroy some of our heritage,
something that we care about. Don't take our video games. Like, it doesn't matter, I don't care if a hedge fund worth a couple billion likes it. We like it.
Exactly.
And he had this room that didn't have 2.2 million followers then, but and they kind of took a David versus Goliath approach. It got a little out of hand. They were selling some death. I mean, they were, it's wild in that room. They sent some death threats. It was pretty nuts. So then the head of Citron, I don't know if it's Capital, the short sellers, they actually put out a tweet and said, I'm not talking about this anymore. Nothing's worth this. Like, you guys can have all the fun you want. Just leave us alone. Well, it just kind of fueled the fire, and then more people started buying into GameStop. And then more people started buying into GameStop.
Right.
And I guess this dude, the folklore is he put $55,000 of his own money in it back in mid or late 2019, and it's worth like $15 million today. And now it's evolved from just GameStop to AMC movie theaters.
Nokia?
Nokia is different. Nokia is actually undervalued. They've got real 5G capabilities.
Gotcha.
Nokia probably should be.
But weren't they playing around with it in the chat rooms?
It's just that we grew up with. I don't know if it's the nostalgia. I don't know what it is, but there was so.
I'm sorry to interrupt because you did the AMC thing, so you're going down that path.
They did AMC. AMC. They opened 2 days ago. Was facing bankruptcy. It was $4. This morning, pre-market, right before the bell, it was $25.
6 times.
Then it tanked back to 16. It found support for you new traders out there and for you old traders out there. It found the 200 moving average and found support. And then, everybody kind of got in line and started accumulating shares and kind of got ready for the next pop. It didn't happen. It kind of failed headed into the end of the day and after hours. But
it was clearly not based on fundamentals.
Clearly not based on these fundamentals.
And that was time. Nobody's going to the movies.
No.
Lots of problems.
They have this
quadruple.
And again, no offense to anybody if you have these headphones, but look up this stock called KOSS. They make average gamer headphones. Average. These are not Bose. These aren't Beats. These are.
But it's the same dang thing, man. You're talking about
They took it up 600% today.
I know, but they like...
It's up 1,000% in the last 2 days. There's this thing I just learned about today that I'd never heard of before called an infinity squeeze.
Yeah, I heard the gamma, now the infinity.
So essentially, all shorts have covered.
Yeah.
There is no ceiling. The only pullbacks will be people that were long taking profits.
Everybody's hanging on for the ride up.
I need to look up. It went from like $10 today to the last I saw it, the highest it got was like $96.
The only thing I can think of is they're going to go ahead and spin this stuff out. They're going to go ahead and blow up a couple stocks. And I'm telling you,
they are trying.
I think the government's going to get into this. And I know you keep saying no.
So here's the thing: the government. I really, really encourage anybody who sees this to try to seek out today's interview with Chamath. And I would say his last name if I don't want to butcher it, but it's just Google or Twitter at Chamath, CHAMATH. He's the man. He and Elon cannot help but smile when they poke suits. Even though they are suits, they're both billionaires. I know Elon is. I'm pretty sure Chamath's a billionaire. He's in charge of. He's taking a ton of SPACs public. He's bringing disruptive companies to the market. He's a super smart dude. He's only like 42. Mm-hmm. He was the guy who became a billionaire off of Bitcoin when everyone was laughing at him. He says Bitcoin's going to go to 200,000. There's nothing you can do about it because it's supply and demand.
Supply is fixed.
He's like, you guys are idiots. He's like, this is like the first year of finance. He's like, this is finance 101. There's a finite number and it's protected by blockchain, so you can't screw with it. How are you going to stop it from going to two? Like, what do you mean?
For people that don't understand crypto, don't understand what's going on. And that's what this whole thing is doing. It's not in these chat rooms. It's blowing up stocks.
So he gets in there and the guy's like, so you're trying to tell me that these are moving because of the fundamentals. And he basically was just like, what are you talking about? Of course not. It's moving because they decided it was going to move. And for the first time in history, you don't have enough money to stop them and you're crying about it. Quit your whining. You guys could have covered. He goes, here's something. He goes, you want to talk about, he goes, if you're going to sit here and try to have a conversation with me on national TV and try to portray that the hedge fund is the victim, you're going to have a really hard time finding an audience. He's like, and then he asked the guy, he goes, so let me ask you this. He goes, okay, so another thing. So the float is are the outstanding shares, not preferred stock, not held by insiders. The float is what's traded back and forth every day. So 140% of the float.
This was brand new to me.
Had been shorted. How do you short
more.
144% of a float. I didn't know that either. They do it just like the dollar in a bank. They can lend it out fractionally. So if I go long for 100 shares of something, that can create this reaction of shorts and longs, just like a bank lends me. Like I deposit $1 and they lend that dollar to 10 people.
Exponentially can be lent over and over and over and over.
He goes, so here's an idea for you, genius. Don't let them leverage like that, and there would have never been a squeeze. Your rules caused the squeeze.
Is that true though? I mean,
100%.
You can't get a squeeze if
not like
this.
You can't.
Okay, I got it.
Yeah, this was like when they were putting C and D grade loans in those tranches
subprimes
and subprimes. You bundle it up and you spin it around and you put it in the oven and you take it out and it's an A+ rated loan. And what the hell is that?
The way that you explain things would make any PhD professor and any of the stuff I study.
Well, here's the thing,
But if you're making money and you understand, because it's the real world, man.
And here's the thing, dude. Watching these suits squirm is kind of fun. And then they brought this guy. I really encourage anybody watching this to check out this interview. It's the halftime report.
Maybe you should just put why don't you put a link on YouTube and be done with it. And
he brings this, and now this I don't understand. So the host brings in this other. He's a Wall Street guy. He's not a retail trader. He has access to options and exotics that I've never even heard of that would really make your professors at the University of Chicago puke.
And
this dude's like, the host is trying to explain how what this guy did was fundamentally sound and well thought out. And it was basically a spread. I'm going to butcher this. Doesn't matter. This has nothing to do with what we're talking about, but it was called a spread put. So he bought options. He bought put options. And basically, if he's in the money by 3 weeks from now, GameStop has to be under $60 3 weeks from now. If it's under $60 3 weeks from now, he makes $500,000. If it's not, then he loses 40. So his risk is 40 for,
So all he did was buy a put.
But there was
did he do a collar on it on the top and bottom? No.
Doesn't matter. The way he explained it was.
I'm just more fascinated.
It's not something that I can do.
Gotcha.
And Chamath goes, did you bring him on here to teach me teach me something? He's like, so you went out there and had some exotic bet that none of these people in the chat room can do? And this is your defense for why you're still the victim? What are you talking about?
Now that is funny.
He's like, these dudes are paying off student loans and you're going to be up in line for your next Lamborghini. Again, help me understand how the billionaire hedge fund is. Now it sucks. We don't want you to lose $5 billion in capital. It evaporated.
Well,
but it's the first time it got
investors, right?
But which investors? Why are those the only investors that matter?
No, I'm not saying that.
Because there's a bunch of people paying off real bills right now.
That's true.
With GameStop, AMC, Nokia, real in the economy, buying groceries, paying off student loans.
I get it. I know somebody that made some money. He doesn't make a ton of money.
And if you make a little bit of money, that's going to go back into the economy. How that's not true. Better? And again, they can't do it forever.
Because you've heard the old philosophy. If you're a billionaire, you can only buy 20 pairs of pants. And you're done. But if you're a part of a family of 5, you could probably buy 60 pairs of pants, which helps the economy and helps it keep growing.
Yeah,
those are all very interesting ways to look at it.
Elon, Portnoy, Chamath, these guys are just all of the up and coming kind of new guard of American business. And they're just like, what are you how about you just tell them good job or just cover your position once you were underwater 20%. So why didn't you just cover? Do you want to know why they didn't cover?
Why not?
Because Melvin just went to Citadel. Melvin got wiped out. And Citadel gave them $2.5 billion to re-short it.
What?
Yeah.
No way.
Yes. So these hedge funds are so cocky and so well protected and so leveraged that when their ass got smoked for $2 billion, they just went to their buddy who has even more billions and were like, help us out. They went and got $2.5 billion loan with 30%, a 30% commission on proceeds with the funds moving forward. And they wiped that out too.
So this is going to be one of those case studies that's going to make it into
P72 investing. I think that's it. Citadel and Melvin.
Okay.
Well, and they got smoked by a freaking chat room. And because they're so cocky, that's really what Chamath's point was, is like, you guys are so cocky. You're so used to getting bailed out by more money than anyone's ever seen. You didn't just do what a retail trader would have to do, which is just take your losses.
Take your lumps.
So cocky, you don't even think you have to take losses when you're wrong. You're so freaking arrogant. So how about this? $5.1 billion. See you next time.
So when did they get the money? Did they get it before today when it skyrocketed again?
It's Wednesday, right? Monday they wiped out Melvin. Monday night, Citadel gave them $2.5 billion. Tuesday, they wiped out that $2.5 billion. Today, they wiped out they had to wipe whatever's left. They wiped out today.
So they're pretty much not going to be around.
They sent out a tweet. Now,
Melvin sent out the tweet.
Yeah, there's a lot of there's a lot of weird, like,
you don't know what's going on.
You don't know what's real
behind.
But there was a tweet went out that just said Citadel and Melvin, they can't take it anymore. It's not worth it. They covered, and when they covered, it went to the moon. I mean, it really did go to the moon. It went from like 250 to like 320 something.
I'm not laughing at the people that lost their shirts. I'm just kind of laughing about the whole situation. And what you're talking about is that they were so cocky, they thought they were going to get the short on it.
Like when you really boil it down to what it means, you're down. What happens if you short GameStop? Who bails your ass out? Nobody.
Just me.
Wife screams at you. Kids don't get to go to as nice of a school.
Yep.
Oh, no. Well, we're so entitled. We're just going to go have our even wealthier friends loan us $2.5 billion. They got that wiped out.
So what else happened today? Because this GameStop thing is crazy, and we're going to see over the next couple of days.
GameStop ripped today. That KOSS, the headphone company, went up 600% just today. AMC ripped at the open. Nokia is...
But AMC fell off, though, because...
AMC fell back. It's still up 300%, even from close.
So 6 to 18, close. Somewhere in there?
Closed yesterday, maybe not 300%. Closed yesterday $6, I believe, and opened today at 16, and then it went, So it's up over 100%. Express, the clothing shop in every mall.
I still remember that being down here, man.
Nostalgic, and they have. So what they're doing is they're going after nostalgic brand names that everybody's familiar with or grew up with, that has a really low float.
Right.
So
then they can control it.
Under 100 million outstanding shares with extremely high short interest, and when they put the squeeze on them. So as you know, a short sale is essentially I'm borrowing shares,
selling it now, and going to replace it later,
and then
so the whole idea is you think it's overpriced now, so you sell it at the overpriced value, and then you think it's going to go down, and you're going to replace it, so buy it back at a lower amount, replace it, and then the difference between what you sold it for and what you bought it for is where you make your money.
Yep.
But the problem is when it goes up, now you have the infinite upside, which you can lose.
Yep.
So
which is what just destroyed the hedge funds. Yep.
So when people get squeezed out, meaning that, oh my gosh, I need to cover, which means I need to buy it back at a higher amount because this is too much loss for me. Once that happens, it's just an explosion on price because they're buying it back because now other people buying it back. Exactly. And so it just perpetuates that
Yeah, it's a cycle. It's a real swing because it's, if you're $100 short, now you're $100 long. That's 200 in the upside direction.
It's almost when you light one of those, those long wicks for the explosion. It's just going and going and going and going and going. And if it actually short squeezes everyone, then they got to buy it back and the whole thing explodes and just takes off. And that's what we've seen run on GameStop, which has just been fun to watch.
When you and I do that, we have to sell our house.
Right. That's true.
And they were so unbelievably arrogant.
But the other side is
$5.1 billion.
But like hedge funds, though, you made a good point. A lot of people, the average person, one doesn't or can't short a stock because it requires you to fill out parts of your application for your brokerage account that says you have experience, you know what the heck you're doing.
Yep. And retailers, there are things called short locators. So there's a share so
you got to find it.
Yeah, you got to share finder. So E-Trade might have it, or TD might have it, or whoever funds. That was another thing. Citadel takes a cut and fills all of Robinhood's trades, which is how they get commission-free trades.
So did Citadel get wiped out?
Didn't get wiped. No, they have billions and billions, but they
but when you lose $2 to $8 billion, whatever they lost,
they had 2.5 wiped out in one day.
Yeah. But I didn't know that they filled it. Gosh.
Yeah, I didn't know that. I learned a lot about short selling because it's everywhere in the news right now.
Right.
And it's still hard to wrap your head around because, just like my subprime analogy, right? Like, go watch The Big Short.
The Big Short.
Who the hell? So wait a minute. So they're called tranches, movies. And then they just wait a minute. So wait, what now? Well, yeah, no, that loan's shit. But if we just stick it in a pile of good loans, then it kind of like averages it out, and then we call an A-rated loan, and then we'll just sell that back to them. Those always go up. But why do they always go up? Because they always go up. America.
Because they're backed by real assets.
The last
60 years hasn't been a problem.
Yeah, America, baby, let's do it. But they're all shit. Don't worry about it.
Yeah.
Oh, I'm shorting GameStop, and the little guys never beat us before. Give us another $2 billion. We'll win.
Yeah.
But you didn't this time.
So what else happened today? Because I want to make sure that, we cover some of these other items. We'll be talking about GameStop probably for a while.
This Wall Street bets thing is just the hottest thing going right now.
But I think the thing that points to is the rules have changed.
The rules have changed. I've learned so much about short selling. I didn't know you could it's not called fractional lending, but you can essentially loan out
more shares than there actually are.
You can loan the same shares to multiple people.
Yep.
I did not know that.
I honestly didn't know that either.
And I know I've told you this 100 times, but the more and more I learn about the stock market, I don't understand how it's legal. And then that's just pour that on the pile. How is that legal?
What was that quote that I just sent you? I sent you that text today, and you said that's absolutely true. What was it? Wasn't it something about being legal and not?
Oh, yeah. You said the same thing to me. You're like, and
here's the quote of the day.
Here it is. Yep.
I forget what it was, and we don't have to hit it, but it's just from a fascination, for me, absolutely just crazy. GameStop, I would imagine from every PE ratio, every asset, book to share price, sales to share price, it is probably just complete crap. And it doesn't really, when you look at
dumpster fires,
we're looking at future, like what can they earn in the future? How much value they're going to, it doesn't make any sense, but we already know that because these guys are pumping it up and doing the short squeeze, but it's really interesting.
Express,
the clothing store.
They're just nostalgic.
And they just went after it. They didn't really care. They're looking at float. They're looking at heavy short seller. And
they think they can move the needle. They're like, if we get all of our power behind this, we can save Express. Now,
because how do you ultimately save the company? Are you saying that they hold a number of shares and they sell those shares and that cash keeps them going? Because at the end of the day, if their actual business is a bad business, and I don't mean anything against any of these companies, but just really doesn't make money, then at the end of the day, it's not going to matter.
Actually bankrupt it, because if they don't have the assets to, you could explain this to the audience better than I can, but the way that I gathered it in snippets today, driving the stock up, the company has to be able to support that.
What do you mean? Just like for earnings levels?
Just from an equity standpoint. Like they have to, like you can't just have you and I can't produce nothing, have no business, and have a stock price of $1,000. Like there has to be something to prop it up. So it's just a
what
money
about Tesla?
Well, Tesla's got a lot of implied value because Elon Musk wants you to mail your monthly utility bill to him.
But you can make a case that that's all on the air, man.
Yeah, but
I get Elon.
Yeah.
I mean, I'm not saying I completely understand it, but I'm just saying I get the fact that he is this visionary and all this. But there's a lot of stuff that has to go right.
It has to go right
to get the 850 or whatever the number is per share. And the thing is it's based on belief, which could be the same thing about the limited, but
he talked about that in the interview today. They were like, well, what's your one shooter? What's your thesis? And Chamath's like, thesis? He's like, you were wrong about Tesla? You don't know anything about Tesla. Nobody knows anything about Tesla. Tell me the exact value of Tesla right now. It's all speculation. He's like, what are you talking about? He goes, this group of people thinks that GameStop is worth a whole bunch. It doesn't matter what you think.
Yes, exactly.
Get over it.
Exactly.
That's how our whole, this, you know.
How it all works, man.
This house of cards is propped up. It
is. And it's going to be interesting to see how it unwinds.
It's going to be scary at some point, but for right now, it's just a lot of fun.
Did you want to cover something else about today? Or did you want to end on GameStop and the limited? Or what do you want to do?
We can, it's episode 1. What else you got?
No, for me, I've been watching, just taking a little bit of a hit today. I can't believe the portfolio moved from, 5 digits negative to up. 4 digits.
So that's the fun part about.
And today was just like crazy. I would say it's a shit show, but
yeah,
you know what I mean?
Yeah, we were stuck 5 digits.
And we're still in COVID.
We're still in COVID.
People haven't been vaccinated. We've got a new president. We believe we know where he's headed with all this, but there's just a lot of, in my opinion, a fair amount of uncertainty as to what's going to really happen with all the businesses. I mean, I'm looking at trends. I'm looking at stuff.
So the world took a 2% haircut today.
Mm-hmm.
It was a solid correction. And stocks that this wacky ass chat room are focused on ran 300% each.
Yep.
I mean, to take that.
So the thing that scares me,
there will be a movie written about this. For sure.
There
will be a movie.
Why wouldn't there be?
It'll be fun to watch.
But, we talk about the tech bubble, and this, is something completely different. But is the market overvalued? Do we really care? This GameStop is completely different.
It's a bubble like nothing we've ever seen, according to smarter people than me.
And I don't know.
It's kind of scary.
I don't know if I believe that. And I don't want to use the old terminology, right? This is a paradigm shift. This is a whole new setup. But there is some truth to it. We're working from home.
Yep.
We're using a lot of technology. How much longer can we go there? Hey, I'm talking about my business. I'm thinking we all went work from home.
Uh-huh.
It makes me sound like the smartest guy ever, but February 15th, we were all working from home because that's where we transitioned to. So what happens to all the real estate? What happens to all the other stuff? Is Zoom really overvalued or undervalued? And so
Zoom is probably undervalued.
There's just a lot of stuff going on right now. I mean, a crazy time to be alive, wouldn't you say?
Yeah.
And day trading, quite honestly, if you got a knack for it, you're a little artistic, you got a little eye for it, there's some really interesting stuff going on.
You can take a million different approaches to it. You can take my approach, which is predominantly psychological. Now I have a lot of technical indicators because that just gives me a target.
You love your candles, baby.
Yeah, but the candle will tell you a story. The candles will tell you a story.
It does.
And whether you think they're fake or not, like I think I've said on another one of our podcasts, you can go to the SPY chart and you can put in all the technicals. You can put in your 20 moving average and your 50 and your 200. You will see those candles bounce off of them.
Yeah.
And that's not coincidence. That's just what everyone's looking at. So today we have more cash in the market. We have more cash. We are more cash heavy per individual than we've ever been.
So you're talking about cash on the sideline.
Cash, just liquidity. We are, as a country right now, we are very liquid. So working from home means you spend less money on gas. Yeah. You probably spend less money on lunch because you're eating in. There's stimulus checks. There's a large portion of our economy, of people in our economy that are actually making more money now than they're used to, and they have a little bit of extra spending money. Take it from somebody who played poker for a very long time for a living. I gambled when I did.
How many years did you do that, by the way?
Two, seriously.
But you kind of liked it. You did it for another?
I paid for my living for about 5 years playing poker, but I played professionally and was backed and traveled and all that stuff for about 2 years. That was fun. But man, when I didn't have money, I gambled more. People that okay, so if you have, I don't know, if you, there was a point in my life where my W-2 said like 32,000. We worked in a casino. So if you gave me like $200 or $600 a week that I didn't have, well, I can't save $600 a week to get myself into like a new living standard, right? Like I can't.
But you don't really have the mindset for saving.
No, but
right?
But what you will do is you'll take 3 or 4 of those checks and you'll go put it on red and spin the wheel because now 1,800 becomes 36.
Right.
And now 36 I can work with.
Right.
And now I just have a Robinhood account. I'm kind of bored. It's pretty easy. I'm getting this money. It's not life-changing. So I'm either, I'll just put it in there and see what happens. Twitter's on fire. There's these Discords. There's these Reddit rooms.
You see some dude making $15 million on
I've been day trading now consistently, like seriously, for over a year.
Right.
And I've been handling my own IRA investments for almost 3 years. I'd never heard of Wall Street Bets. It's the largest, most influential online community there is. I didn't hear about it until I was caught in one of their stocks, and I couldn't figure out why it was moving. And, I have rules.
Right.
So if I don't know why I'm holding it, and I'm not perfect, so sometimes it's just based on momentum. So I took a little piece of the move, and I was like, it was actually KOSS. It was the headphone company. I'm like, AMC. Why am I seeing AMC on Twitter?
Yep.
Why am I seeing GameStop? Who the hell wants to put money into GameStop? And then when you peel back all the layers of the onion, and you realize there's this community that makes actual influential decisions.
Right.
Now you have to change your approach a little bit.
Yep.
Because usually I wouldn't put money in anything unless it was not fundamentally sound, but technically sound.
It's almost just a little bit like a pyramid scheme. I know that sounds crazy.
No,
but
it's worse than that. It's a Ponzi scheme.
Yeah. Because the last person to get out is the one that's going to lose.
Screwed.
And that's...
You remember Kodak? You remember when President Trump...
pumped it and...
Goes on national television.
What's it at now, by the way?
Bad.
So I forget what it jumped to.
Went from $1.20 to $60.
Yeah. So whoever
somehow that Martha Stewart went to jail for selling
was
money.
Was it $20,000
for we used to call that a hookup. That's a tip. Hey, dude, some bad shit's about to happen to your money. You want to sell that? Okay, sweet.
Like Trump gets on there and he does his
Trump gets on there, gives $500 million to Kodak. And welcomes him to the family and the fight towards COVID on his nightly presser.
I would love to read more about that one, too.
Oh, I'm sure it was just a coincidence that the day before he made the announcement, there was like 300% higher volume than there had been over the last 10-year average.
Wonder if he had any buddies that might know what was going on.
I can't imagine anybody would ever. Martha Stewart went to jail, though. Like, who did she
$20,000
screw over? Like, sweet Martha Stewart goes to jail for $20,000.
You never know the full story.
Now, here's the thing. After it peaked, if you day traded it, there were small peaks and valleys. But if you were just holding, because the president of the United States said, welcome to the family and the fight against COVID,
quote unquote,
if you bought it at the top, you were guaranteed to lose money. And never.
Well, if you buy anything at the top, you're guaranteed. But
it's not supposed to be the top when the president says it.
Exactly.
The president's not supposed to be the poster boy for a pump and dump. That's not supposed to happen. You're supposed to be able to trust the president when he says Kodak's going to cure COVID.
Did he get a ton of bad press on that?
No. No, they just kind of...
Because I don't remember a ton of articles going on.
He got no bad press. And it was so divisive and, and
I know I'm going... I'm going backwards, but you remember the Clinton... I could say the Clintons got in, but remember when Bill got in, there was a clear edict from Bill that they're going after the healthcare companies. Like, I think it was like pharmaceutical and so on and so forth. So it depressed the stocks because everybody's like, hey, I'm out, Bill said. And then what they were trying to say ultimately happened is a lot of their good buddies bought in low and went ahead and wrote it back up because they pulled back off and the stock shot up. Mm-hmm. So it was kind of, hey, I'm going to do a back scratch for you. Now, I don't know anything about that situation. All I know is that they said it, stocks tanked. Then they got out, stocks rose. And there was this kind of discussion about, hey, they were scratching somebody's back.
Yeah, you think that this morning Americans just woke up and were like, you know what? Today I'm a little less certain about the market. Let's pull enough money out to take it back 2%.
Right. No.
It's all manipulated. It's insanity, which is why you have to approach it even now. The Teslas, the Apples, the AMDs, and Microsofts of the world, they have so many outstanding shares, and they're so big that there almost isn't an institution or one person that can really influence and move those stocks. But when you get down to stocks with reasonable floats that are under $100 a share, really under $20 a share, one guy with enough money can do whatever he wants.
I think the key is that, the market, there's a fair amount of fundamentals out there about it, but there are also momentum moves. And what I mean by that is there's this whole thing about behavioral finance, which is somebody says, oh my gosh, it's moving and you need to get in or I need to get out. And it's also the technical aspect, and the behavior and technical go together, that when you see the momentum move, it does something in your head where you either want to get in or out. And those technical moves are real. Mm-hmm. And I can't believe I'm sitting here saying this, but I started to say it, I don't know, about 7 years ago. I think we said in the other one, the CFA, which is a hardcore financial analysis, 5 years, 20% of people actually get through it, whatever. That is actually putting in their behavioral finance. Mm-hmm. And a lot of people are really looking at the technicals because they do mean something. And so at the end of the day,
you combine that with the fundamentals and you really get something.
It's that blended thing. But, you're right.
So here's and this, I'm going to butcher the stat, but because of the liquidity in the market and the Robin Hood effect.
Mm-hmm. And we need to talk about Robin Hood. You had so many good points about it. We can't do it now, but
we'll do dedicated topics that are shorter.
And as a time check, we're at 42 minutes.
Oh yeah, we got to wrap it up. But with the Robin Hood effect, back in the day, you used to wait for earnings reports.
Yeah.
And if they beat the report, bam, it went up.
Mm-hmm.
They were talking about how much, basically like how many billions of dollars are being lost because the average investor is no longer looking at fundamentals or real company earnings or what they produce or if they're disruptive or if they have a freaking product of any kind or if anyone cares. Because most people with the first stimulus check can't, they don't want to go buy, same mentality I had, right?
Buy toilet paper, buy
soap.
I
can go get a third of one share of Amazon.
Yep.
And invest.
Or
I can go get 600 shares of this penny stock and hope it rips to the moon. And then we're drinking better beer this weekend.
Better.
You know what I mean? Like we're off Bush and we might,
or my kids get shoes.
Right? Like it's scratch off ticket mentality. It's not investing of any kind. And I'm saying I am one of they. Fortunately, I have really put a lot of effort into learning this wacky scheme, but most people are still working. So they got their check. They're in Twitter. I see it all the time. Or they're in Robinhood. I see it all the time in Twitter.
Working.
some Saved by the Bell character on Twitter will say AMC, and people, thousands of people will just do it.
Because somebody said it, and we're going to...
They'll check their phone at the end of the day, see if they won or lost, because it doesn't really matter. And that's our new stock market.
Did you hear about this new thing where you can put your money, and it's actually a deposit like a bank. You put your money in, you get a specific amount of money, but they spin a wheel once a week, and if you hit anything, you get a little bit more interest. Have you heard this? This is crazy.
No.
And there's like some crazy correlation
Welcome to America 2021.
Oh, dude, it's like crazy. And what they were saying is there's this weird correlation between the amount of people that play the lotto when it goes down. Then there's more people that play the market. But this whole thing is there's an actual app that you put your money into it as a deposit, and you earn so much interest, which is more than a bank. And then every day they spin the wheel.
It's literally like The Price is Right.
It is crazy. I'll need to have somebody show it to you.
Yeah,
but
I should see that too.
But it's this whole thing about gambling.
Yeah.
You know, if you can gamble and you're drinking better beer money, or you get shoes or a new dress, that's really cool, because what's the whole old saying? Easy come, easy go. Yep. If you get a stimulus check and you're still working, whatever. I'll let it ride.
I feel like the best analogy I can come up with for like the stock market today. Have you ever seen Caddyshack?
Yeah.
You remember when the 1 hour the caddies get to swim in the pool?
Yeah. Yeah.
That's our stock market right now. It's the members of the club who are pissed off that things aren't organized and orderly and easy like it's always been for them. And us Robin Hooders and day traders are just like, doing cannonballs and tipping over we're knocking over the lifeguard.
That is a great visual.
We just come in loud, disorganized, cussing at everybody. What are you throwing footballs?
And you don't know how to behave yourself.
You don't know how to. That's not how it's done. Well, how is it done, dude? Guess what? This
the last 30 years is how it was done.
Yeah. You guys took a 2%
everything.
cut today, and we got rich.
Yes.
Sorry
exactly.
You don't like it. You better go along to get along, otherwise you're going to have a real tough time. But here's the thing. Apple smoked earnings today, and it did not move like everyone would like it to.
Yeah.
And the scary part is, we could talk for 9 hours, but objectively, we need those earnings calls to matter, because those companies in the Dow have to keep increasing in value, otherwise it all goes away.
You might have
so it's a catch-22. So I understand the fear, the overall underlying fear of, well, it can't just be for nothing, because the big companies need the revenue and the cash infusion to innovate and R&D and promote and keep the economy going. But in a microcosm of, do I give a shit about two hedge funds that went sort of bankrupt? Nope, funny.
But it doesn't really matter as far as like their stock. I mean, for the most part, if their stock is out there and outstanding, doesn't really mean much to them other than like the executives who have thousands and thousands of shares. They can issue more shares if they need.
Can't they borrow against it? Can't they?
They can borrow. Sure, they can float a bond. They can go ahead and issue a bond, right? But at the end of the day, I don't know. I don't know how much it really means to them. And maybe I'm got a big hole.
See, and I got this from CNBC too. Maybe they're upset. Their feelings are hurt. The suits are very upset. They had some chairman of a treasury something today, and he had like an ascot on, and he was just very upset with the caddies who were in the pool.
Because I mean, if you really think about it, if your share price goes to nothing, then what does it really hurt? It doesn't mean that your lending rate or your credit rating tanks, because your credit rating is still based upon how much money do you earn, how many assets do you have, can you, go ahead and recycle your accounts receivable, can we get our money back? So I don't know why that's big. Does it hurt the top dogs and all the people that are invested in it? Sure, it would hurt them if it went to zero, but that doesn't necessarily mean that the company would stop working. It doesn't blow up because the stock's at zero. I mean, even when Eli Lilly's stock tanked, it didn't mean their company was going out of business. They could care less.
It really is just kind of
I mean, if you're talking about preferred dividends or dividends, they can still pay dividends.
Yeah, again,
AT&T has been paying some crazy wasn't it 5 or 7% dividend rate? Didn't matter. They're still making money. Their stock price didn't go up, right?
Yeah.
Because the dividend rate was based upon the share price, right? And so, it's like I'm not sure if that really matters. I mean, yeah, the guys that have a lot of shares, that could be bad. The people that are older that are living on dividends, that would hurt. But it doesn't mean anything really to the company. It matters, but I don't know exactly how it matters. Now, if they have a whole bunch of treasury shares.
This is way over my head.
But if they have a whole bunch of treasury shares, which mean, hey, we've asked that we can go ahead and sell a million shares or 100 million shares, and we hold on to in treasury 90% of those. If the share price goes to zero, then I can't issue them and get money for them. Now, that would hurt. But a lot of times, I mean, I'm sure you've heard, they buy back their shares in order to push the price up because you reduce supply out there. Uh-huh. It increases the price. So, yeah, that's a weird. Maybe we should get into that one a little bit. But
maybe, I need to learn a little bit more about it.
We're already at 50 minutes. So
yeah,
we should probably say goodbye.
We got to wrap this one up. So here's the thing. These recaps, it will be more discussional.
Confrontational.
Discussional.
You got some big words there.
Can you edit that? Conversational, maybe?
Yes.
So these will be more conversational recaps of the day. And then we will do shorter, more concise, topic-oriented episodes as well. So do me a favor. Click like. Hit subscribe. We'll make it up to you. Sorry this one went so long. It's the first one. But we'll see you guys next time.
Thanks. Bye.